What's going on, you guys? It is Shaquan from SLFX Trading, and in today's video, I am going to be showing you guys two different types of pullbacks that we trade on a weekly basis that you want to be on the lookout for. Now, I'm doing a two-part series for pullbacks and Fibonacci. So this is the first video to this two-part series, okay? Now, I asked on Instagram, like what kind of videos people would like to see, or if anyone had questions. And someone had a question about the Fibonacci retracement tool. And in order for me to teach on that retracement tool, I don't want to assume that anyone knows what a pullback is or if they know what different types of pullbacks they are. So I said, listen, let me do a two-part video. Let me teach you guys what the pullback is and the two different types of pullbacks, and then let me do the Fibonacci retracement video because it's only going to make sense. So let's get into the first part of the video, what the pullbacks are and what they represent. Okay, so you guys see here that I am on a price chart, but I did like this little illustration, and I pray you guys like the illustration and it makes sense. It just brings everything to life. So a pullback represents a discount in price. Okay, now it doesn't matter what market you trade. It can be the cryptocurrency market, it can be the stock market, currency, which is Forex market, it can be bonds, futures, whatever the case may be. When you are a trader, remember you are trading a price, and we're trading discounts in price. And the reason why I say we're trading discounts is because the markets we trade, everybody is a buyer. Case in point, anytime you go out to spend money, you are a consumer. And what do consumers do? Consumers buy. Okay? Same thing we do here in the Forex market. The Forex price that we trade is a change in exchange rates. Okay? So when you look at this price scale over here to the right, that is all about exchange rates. I'll give you guys a quick example. So this is pound JPY. You guys will see where it says JPY over here on the right hand side. This is how much it will cost anyone in Japan. This is how much it will cost them in yen to buy one Great British pound. So that is what we're trading, the exchange rate of how much it costs for the people in Japan to exchange their currency or to buy 1 pound. Okay, Great British pound. Now, when you're dealing with the stock market, it's a change in a company's stock price or the value of their stock. If you are a trader, that is what you are trading, or even an investor, that is what you are buying, and you want to buy in the stock market at a discount. In the Forex market, we want to trade at discounts, whether we are the seller or the buyer. Now, there are price tags, and I'll show you guys what I use, and I've done a video on this. And if you want to know how to use the price note tool or the price label tool, I will link a video at the top of this video in a card for you to watch. Okay, so a price tag is in the form of higher highs and higher lows, or price tag is in the form of lower highs and lower lows. Okay, now it is important to understand that when we're trading these price tags, they're also known as retracements or corrections. This is why we need the pullback. Pullbacks are called by many names. Okay, retracement or corrections. And what these are is they help create the uptrend and the downtrend. Now, let's get into the types of pullbacks. Now, I was just going to focus on an uptrend in this video, but then I said, no, Shaquan, focus on the downtrend too. So let me go over the uptrend first, and then I'll go over the downtrend first, okay? So when we're trading an uptrend, and this is why I'm doing two different types of illustrations. The first type of uptrend that you can be trading is a broad trend, and that's a market condition, okay? So your trend is the direction. Your condition is how that direction is flowing and moving. Imagine taking wide steps, or you're climbing up some stairs, but the stairs are wide, and so your legs have to go further apart, so there's more space in between, right? So let's talk about the uptrend pullback here. So remember, the uptrend is an opportunity to buy lower prices. And when an uptrend occurs, here's what it's creating. You have an initial low point, and then price goes up. Then price pulls back. And when price pulls back in an uptrend, you're wanting it to stay above the last highest price. Because remember, you're buying at the discounted price, because the rules of supply and demand is that you buy low, but you sell high. But we're only going to focus on the trend trading part, which means only buying at the discounted buy areas at the higher lows. So let's say, for example, price goes from 155 to 157. Okay, cool. It goes up, but we don't want to buy up here. Price is too expensive. Price is too high, right? Remember, people are looking for a discount. You like discounts, right? Clearance rails, sales racks, 50% off, 20% off, 30% off. We're looking for that percentage off, right? So the price declines to 156. As long as price stays above 155, you're going to be the buyer as the trader, and you're going to trade back, probably back up to 157s and higher, because that's what an uptrend does. It continues to increase up past the previous highs. The price goes up to 158, then it declines to 157, right? Now, when price declines to 157, you're hoping that it can stay above the last highest price here at 156. Because once again, a discount says, especially in an uptrend, this is supply and demand once again. Even though we're going up, the people in Japan, they're steadily buying the pound 1 yen higher. Remember, 155, 157, 156, 158. They're buying it, what we would say, in $1 increments, but 1 yen increments higher. But every time price decreases, they're going to buy it. And even though they're buying it $1 higher, we're buying it $1 cheaper. So price can increase up so we can make a profit. Okay. And so then when price goes up to 159, the pullback, we're hoping that price can pull back but stay above 157s. So in order for a higher price to be achieved, you guys, it has to pull back. Okay, but I want you guys to remember this: the higher price moves up, the further it has to pull back. That's what's creating this big space in between, because the more price has to travel back up, the wider move or the wider area or the more exchange rates or pips it has to cover. Same thing for a downtrend, you guys. So this is an opportunity for us to actually sell at higher prices, because once again, the discount, okay? But we're trading to the discounted prices. This is the difference. Remember, in supply and demand, you sell high, you buy low. So when price goes from 159 down to 157, remember, price went up to a higher number. We're going down to a lower number in a downtrend. When price pulls back, you're hoping that it could stay below 159s. So when price goes to 158s, the discounted price was already 157s. But what's going on is, if price can stay below 159s, we're going to sell back down to the discounted price, where the consumers in Japan will be buying the pound cheaper. And if it goes down to below 157, they're getting more of a discount. Okay. And we're going to profit off of what they are buying, and they're happy they're buying at a discount, right? We're happy when we buy at a discount. And if price continues to get lower, we're even more happier because we can buy a certain thing at cheaper prices. The thing here just so happens to be currency, right? That's the supply. Supply is inventory or a product or a service. That's what we trade here. Currency is the thing, okay? So when price goes from 158 down to 156, it's lower than 157. So if price pulls back, right, you're going to want it to stay below the last highest price where you just sold from. And or sold, not sold, but sold sold from. And if it does and continues to decline, then you're going to continue to be the seller, but at the highest price. Okay. So the pullback has to be achieved. Now, some of you guys may ask, well, Shaquan, can we trade the pullback back up to a certain point? That is up to you. But remember, when there is more space in between in a downtrend or an uptrend, that is called a broad market condition, because it takes a while for price to travel. There's more pips to cover, which means when you trade back down in trend continuation for a downtrend or an uptrend, you're going to catch more pips, because pips has more area to cover. So this is the broad pullback, okay? The last one that we want to cover is the narrow pullback. So this is where a lot of traders get tripped up at, because to be honest with you guys, the narrower move is where you're going to make the most money at. And the reason being is because it's like a tight trend. Like, you ever seen price moving really tight, up and down, up and down, up and down? A lot of people get this confused and they say, wait, it's a consolidation market or a ranging market. But if you put your price label tools on, or your price note tools, or anything to capture the highs and lows, if price is moving up and your numbers are increasing or decreasing, you may actually find that price is still trending. It's just trending a little bit more tighter. So let's do an example here, okay? So let's just say that price goes from 156.50 up to 157s. Okay, that's a 50 pip move. But then it moves back down to 156.750s, right? And when it moves back down to 156.750s, that is a small decline, again, of about 25 pips, okay? So this is a small area that price is covering. But then let's just say that it goes from 156.750 up to 157.250. So now what that becomes is a 50 pip move. So that is a small range once again for price to cover. But all in all, price is still moving higher, but in shorter bursts. And that's what makes this narrow. Same thing for the downtrend once again. There's hardly any space for price to travel. So what this means is this will be the difference between you entering from a higher time frame and a lower time frame. When price moves in a tighter range, it is better for lower time frame traders to trade versus entering a trade on a higher time frame because the risk reward will be better. But if you're trading a broader condition, then entering on a higher time frame like the 4 hour or the daily is a little bit more ideal because when price pulls back, if it pulls back, you don't suffer that great of a deal and you get a bigger candlestick confirmation better on the broad condition versus trying to get one big candle confirmation on the 4 hour time frame. So what I'm going to do to make this a little bit better to see, we're actually going to go to an actual price chart. So let's head there now. All right, guys. So this is pound JPY, 4 hour time frame. Doesn't matter the time frame. Let's take the time frame out. What we are going to focus on is we're going to focus on the information. No entries, just the pullbacks in the market condition, the broad and the narrow condition. Okay, so let's just say that in this area here, because I want to make this a little bit more realistic. Let's just say that price here is trending. Okay, now when price is trending, it goes from 140.471 to 138.897 to 140.730. This will be an uptrend because price just made a new high. But then all of a sudden, price has a deep decline. Now, this will be a broad area. And the reason why this is broad is because if you guys look at all the space in between here, or when price made a huge decline, look how far price has to travel back up before it declines again. Okay, that is what is going to make this area here very, very broad. Now, when price does decline here, it does what's called a reversal. It switches the trend. So instead of us looking for buys, we're going to start to look for sells. Okay, so in this point here, this is a huge decline. Price has to pull back. Once again, this is broad because of the space. Now you're hoping that price can stay above 140.730. The reason being is because the sellers just came into the market. And when the sellers came into the market, price needs to stay below 140.730 because if it doesn't, price will continue back up. So price does prove that it can stay below, and then it has a huge decline down. This is a huge decrease in price. Once again, when dealing with supply and demand, this means that now the people who live in Japan are able to buy the Great British Pound at a lower price, and you will have sold the information to their discount. Okay, once again, that's what we do in a downtrend. All right, now do y'all see how much space is in between here? This is very broad. Price dropped a few hundred pips. Okay, so let's see how many. I'm just gonna measure it from the top to the bottom. Price dropped over 350 pips. Okay, which is really, really good. But look how many pips price will have to travel back. We don't know how long it's gonna take for price to travel back those 350 pips or less. We don't know if it's going to take a week, 2 weeks, 3 weeks. Momentum would have to kick in. Volatility would have to kick in. If there's low momentum, price is going to consolidate. If there's high momentum, price will just skyrocket back up. However, what we do know is price has a few pips to travel, right? So in this example here, we will be hoping that price could stay below 140.344, but it doesn't. Instead, price increases higher above 140.344 or 334 to 140.480. And in this case, we would now be looking for buys. So this will be the reversal once again, okay? Let's see. So for the first time it reversed in December, this is the first reverse. This is what, December 2nd. This is December 17th. So there's a 15-day span, right? That's two quick reversals, okay? Now, in this case and in this situation, when price does reverse, like I said, we would not be looking for sales anymore. You're going to start to look for buys, but price still has to pull back. And in this example, because price reversed and the buyers came into the market, you're going to hope that price can stay above 136.788. Now, price has a few pips to travel. This is once again a broad area because look how much space you have for price to cover when it pulls back. Okay, when it pulls back. So now there's another broad condition, and you guys see how price went back up, even past 140s to 0.48. Okay, now at this point in time, you're going to continue to look for buys, but price has to pull back because once again, you do not want to buy at a high price. You want to buy at a lower price. Now you're hoping that price can stay above 136.96, but you need price to travel a lot lower, or you hope price can travel a lot lower. In this case, now we can't control how price travels. We cannot control the volatility in the market. You can only keep up with it. In this case, price does not travel to prove it can stay above 136.969. And keep in mind that when I say that, you don't want price to touch these numbers. You need price to stay above these numbers. So I will be hoping for a deeper pullback, but in this case, we don't get it. And the reason why we do not get it is because price actually ends up making a new higher high. Now, I want to show you guys the difference between broad and narrow. You guys see how when price dropped down here, it was further away from 137.890? Well, in this case, when price increased, look how close it is to that previous high. That shows us the buyers are in this market. So when price pulls back, look how less of a space it has to pull back. That is what makes this a little bit more narrow, and your trade will actually come quicker than it coming quicker here. This could take a week or so, or even less than a week. I think this actually took a day. I'm thinking about the daily time frame, but this pullback can probably take a day, 2 days, where this was going to take maybe up to a few days to a week or so because we're on a 4-hour time frame, right? So when this happens, this lets us know that for it to take profit, it won't take that long. And so we're going to just move to the right to see if price goes to 141s. Okay, so price does go to 141 right here in this corner. I don't want to play it too far out. And so when it does go, okay, we can see that this becomes the new higher low. And look how close price is now. This higher high is close to the last higher high at 141.341. And in this case, an example, if price can pull back a little bit more but stay above 139.499, this will be a short pullback because the space that price has to travel to get back down isn't even that far. And that's if it pulls back. And then we get a small pullback and then price continues back up. So once again, you guys, this is just a quick illustration of the two types of pullbacks there are. Broad, which means it's going to take a while for price to pull back. It's going to have bigger space or more pips for it to travel to and fro. The narrower pullback is going to trade in smaller bursts. It's not going to take long for price to pull back nor for it to reach or take profit, depending on where you exit the trade. So you get more quicker trades in a narrower move. But please keep in mind to be careful with narrow moves. And this is why I like to use tools. If you have a consistent flow in price, especially in a narrow condition, please do not say price is ranging. Please do not say that price is consolidating. Price can still be trending, but because most people are taught like support and resistance and break and retest, you actually forget how to see the trend. And if you're a trend follower, you want to keep as less things as possible on your price charts. You want to keep it freely flowing so you're not taking profits too early, you're not getting into trades prematurely, and you're not trading against yourself when you have more things on your chart to make trading decisions on. Okay, so I would love to know what you guys think about this video. Comment down below if this helped you, and I look forward to giving you guys the next video on the Fibonacci retracement, probably the next video or two. Okay, I want this to digest. I want you guys to really take your time, go on your charts, find these areas on your price chart when price was broad and when it was narrow in an uptrend or a downtrend, and let me know if that helps make a difference. I'll talk to you guys in the next video.